The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. Good to be back. It was away Friday, but it's really good to be back. Had a couple of questions over the weekend, and I hope to be able to answer them now. Let me just get them ready over here in case I forget. Let me go right there. That was number one. Okay. So what we're looking at here in the Dow, and it was very interesting what happened on Friday because the buying pressure held up all the way into the close. Now, that was, to me, very important. That was significant because it said it wasn't just a one-shot deal, and it was a good response to economic numbers, but that wasn't even the case. The real issue, as I see it, is that the bias towards the downside between those folks that were saying we should have some, I'm bullish, but we should have some kind of a pullback because I want to buy. The bearish sell in May, go away crowd. And the folks who have missed certain stocks and want to get in on any dip, I think that's really the story. But I can put that into category A. Category B, as I see it, is determined by the intensity of the buying. In the ChapmanWave methodology, I look at many different things. I boil it down to certain very critical technical indicators. Sentiment, technical, somewhat fundamental, but that's in a very general way. And what the question I had was, from a number of people, was, what gave you the buy signal on Thursday, pre-market, to go long? And that's where we went 200% long the Dow. And there were so many signals saying to me that it was more a case of the downside at that particular point being limited. Look, let me just show you the charts that I'm looking at. Right now I've got the E-mini. If you're looking at Tiger TV, the chart on the left looks a little messy. I don't like that. I'm really working hard to find a white background chart that can give me as many visuals. One of our tigers sent me so many times as an artist, the degree of intensity and illumination that one can get visually from the chart with a black background as opposed to a white. And I have to agree, although I'm going to be experimenting with something else somewhere. So the issue is, how can I get this particular chart? So what I will do right now, because I really want you to be able to see it. This is the E-minis that trade from Sunday night. They trade, let's call it, pretty much 24 hours a day. Most of the time they're trading. From the low of 50.30.75 on the June contract, the E-minis, the S&P E-minis, went to leg A on the 25th of April and pulled back, and they went to leg B, that very ugly candle of the 1st of May. But actually, it was only an ugly candle if you didn't do your homework. If you did your homework, you would see that it stopped right on the 9-period exponential moving average, with the fast moving average not even going negative, not even close to negative. And the stochastic was still way up in the, at that particular point, May the 1st. Let me give you the exact number. May the 1st, the MACD and the stochastic were at 86.88 and 85.70. So they were still very positive, both the fast-moving average and the slow-moving average. I couldn't resist saying to myself, wow, if I'm able to get an entry point on that, maybe a couple of other long positions, that would be a great opportunity, because if it holds the 9-period moving average, and you've got to believe in your indicators, and I do believe in the 9 EMA very much, what it says is if it treats it as a bounce-off point within a couple of days, did I know it was going to be in 2 days, less than 2 days, it would break the previous high of 1595.50 and go right through it to start leg C. We've got leg C up at 1514.25 on Friday. ChapmanWave methodology, what do you look for? You look for the most identifiable lowest bar, and you start your wave count. And if there's a buy signal that goes to a buy mode, it should take you to at least 4 peaks higher. I'm expecting at least a leg D. Wait a minute. Look at the 120-minute chart. Now let me expand this a little bit so that you can see it better. The 120-minute chart had a beautiful, from 1530.75, we went peak D, then a spike to an E/A, which turned out to be an A because it went to B, C, and another D. Then it had a right arm extension. I always raise my arm when I do that. Right arm extension goes to where? It goes to an E, and then it pulls back very sharply. Starts another peak, A, B, C, D, goes to 1595. That was the high of the 1st of May before the pullback. That went to 1576. And now we've got A, B, C, D in the 120-minute chart. And D's where you expect that they could. Look, it happened before. It happened over there. It happened over there. It happened over there. And now I insert it again. And it's held in a sideways consolidation move. I've got the rectangle there. I've got the 9-period moving average. I've got the MACD just slightly turning negative. The stochastic is also slightly negative at 79% instead of 80. And now I said to my subscribers, we can expect a doji type candle today, some kind of a consolidation after a fantastic move. That's the 120-minute chart. Why did I want to show it? For 2 reasons. One is it gives you the trading, constant trading. Stops on Friday, I think 4:15. Starts on Sunday Eastern time at 6. So it's just constant, except for 45 minutes, some kind of a break. I never remember when it is. I always have to, the message tells me that I can't be trading right now because it's closed. But it doesn't close for very long. Now, this is leg E in the weekly chart. Leg E says you've got to start becoming a little bit cautious at this particular point. So now let's put it together. The numbers are the Dow's down 20 at 49,953. If I can just move this away for a second. Yeah, IBM's down $1.76. Johnson & Johnson's down $1. You remember I spent all that time just over a week ago. I said, look at these defensive type stocks. They're all coming into peaks of consequence. So Johnson & Johnson, what does it do? It's a leg. I'm going to call it for now leg F in the weekly, although technically there are no real signs to say that that's the case. And I've got D in the monthly. We'll see if that's going to turn out. But look at this. It goes to D, and then just a nominal spike to an E. Let me just look for certain characteristics here that I'll have to look for. I have to put it down because all the technicals are pointing down. So there, that goes plus sign. There it goes. Here we go. So I'm looking for, what am I looking for? Some kind of clues, either candle clues or something to say we were getting, yep, there it is. So there's a divergence between the fast-moving average of the MACD and the slow-moving average as the price went to a higher high without confirmation. The stochastic went under 80%. This is defensive type stocks could be pulling back. Johnson & Johnson, we spoke about it the other day, and let's see what else we've got. So IBM, this is just a pullback in IBM. Should be going to a leg D. Johnson & Johnson, UNH is up now. It was down the other day. Just real quickly. Yeah, as I see it, there's not too much happening. Just this, this is a very nice market right now. So you've got the S&P at up 29 cents to 1614. Now the comp index is up 8 at 3387. At 3387, that's very nice. Now one thing that's helping the Qs, you've got Apple, spectacular move from 387. Was that 387? Let me just double check. 385.10. Oh boy, 385.10. Nice call. That was Larry gave a call there. So we've got 385.10, and right now it's trading at 458.73. That is a 70-point increase. That's very nice. Leg A in the weekly chart, just a real nice. I'm calling it a rebound for now. I'm not calling it a brand new buy mode just yet. In the daily, it is a buy mode. In the weekly, nice action. I don't know yet if I can call it anything other than a bounce. So that's that, and we've got gold up to at 1466. Now this is very interesting. Look at the GLD. The GLD has just gone sideways in this consolidation after a spectacular move from 130.51 on the 15th of April all the way to 143.43. So that is a 13 point rally, 9%, almost 10%, and now it's pulling back. It's full the gap. Yep, it's full. Oh, exactly. 143.43 and 143.43. I love the way these things work. How did it know that it's going to stop right there? Once it's filled the gap to the penny. Anyway, it's taking a little bit of a breather, but I like the action. I don't think it's a fantastic buy mode or buy signal or anything. It's just so far in the daily chart, it's a great counter trend rally. The weekly chart actually looks stronger than the daily chart because of the different candles involved. I think that is going towards the 145 area, and then we are along a position in the in one of the ETFs for gold. We've got now silver is down 17 cents at 23.84. Platinum is down 14.94. High grade copper is at 3.30. It's down 70 cents just once again. I'd like to, I always like to have a good look at copper. It's very important. Yeah, this is a great single leg A up bounce in the high grade copper. We'll have to see where it goes to after this. And we've got crude oil at 95.54, down 7 cents. Bonds are down 8 cents at 146.26. Now this is something very interesting. In my opening call, which is my daily service, goes out. I have a very, very comprehensive look at the markets every day. I've just today I must have sent out about 9 charts, I think at least 9 charts, with all the different things that we're looking at, plus the stocks that we have long. We only have long positions right now. I will be preparing some shorts real soon for at least a pullback, but it's going to have to be very selective, and I've got my eye on a couple that I believe could be the ones that pull back quite sharply. Most importantly, what I want you to do is, right now, I want you to go to, so the TLT has gone to peak D. It's pulled back in a sell signal to a sell mode in the daily. The weekly chart is a nice bounce. The monthly chart is the one I've got to keep looking at. But I'm just going to reiterate over and over and over. The Fed said they're going to prop the bond market. They're going to keep it up. The Fed has never said it, but we know that for years and years, they have wanted a weaker dollar. So even though the dollar looks like it's having a great rally, all it is stuck in a trading range. It's just stuck in a trading range. All right, let's leave it at that. Now, let's go to, these are the things I wanted to discuss. I was going to do it last week, and on Thursday, and for some reason, of course, I had all my stuff written down in front of me that I wanted to do, and also all my cuttings and all the things that I wanted to discuss. Then forgot to look at it because we were so busy with callers. The Boston Globe had a section, this G-style section, fashioning Gatsby. I'll talk about Gatsby when we get back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman. We are back, and the Dow is down 16. S&P's up $1.55. And let's see. Excuse me. Suddenly I got this frog in the throat. How did I ever get this thing called the frog in the throat? Anyway, there it is. Freeman in Dallas. How are you?
Pretty good, Basil. How's it going today?
Going very well, thank you.
Hey, Basil, over the weekend I was looking at some charts, and I wanted to short QIHU, and I'm putting a short for only 10 shares at 34.80, I think 40 cents above where it closed on Friday. And when I got to it, I saw that thing just rocket up, man. And now I just I was going to put a full position, but now there should be something going on there.
So, all right, Freeman, this is what I'm going to suggest, because although it's in leg D in the daily chart, folks, we're looking at Q. Why did I spell that wrongly? Q. It should be an I, an H. Q 360 Tech Ads, Chinese search engine. It's in the monthly chart in leg D. Now, this is the whole thing about it. In the monthly chart, there's a cup formation. It's gone from the opening month of, that was March of 2011, opens at round number 27, goes to 39.42, slumps down to 13.71, so 60-something% to hit. Comes back leg A, leg B, leg C, and now it's D. But wait a minute. D is so far, the month has barely begun, but D is 36 37.93 right now. The high today is 37.60, and it is nicely above the left-hand high of 38.29. So let's just say that technically the monthly MACD and stochastic are still looking very good. Now let's go to the weekly. And I just need to see if I can change the format space to the right. 5, that's good. So the weekly chart, I have an alternate count, and I looked at this recently, and I know this chart pattern so well, and I kept saying to myself, this is a very positive action in the weekly chart, but the technicals are not confirming, and that's the one thing that kept me from looking at it either as a long or as a short, as a potential double top. So right now it is powered through everything on the left side. There's a chance that this could be not leg F but leg B. I say a chance because the day has just begun, the week has just begun, and we don't know what Friday is going to give, but as it stands right now, the action is very positive. So now I have to look at the daily, and the daily says, whatever the reason, I wonder if I could just find out the reason. Give me 1 second here. Let me see. Status bar. Oops, no, I didn't want status bar. Oops, that was wrong. I don't even know what it means. Get rid of status bar. Status bar out. View. Shortcut bar. Okay, shortcut bar. Let's just scroll down shortcut bar and we'll go to news. If I can find it. I can never find it on this. There it is. Okay, news. Let's see what it is. And the news is filing to sell. 100,000 shares. That must be one. Baidu victorious in lawsuit over. Oh my God. There's all news that should say that it's not good for the stock, selling 100,000 shares at a Form 144. That's probably an insider selling. And it says fighting to, and it says Baidu victorious in lawsuit over Q. And so far, the stock's up nicely. So I can't use that. All I can say to you is I would, on a very quick trade, it could pull back a little bit from here and maybe give you an opportunity to get out. But being in the puts, you probably saw your premium shrink a lot, right?
No. What happened is I only put 10 shares. I didn't buy anything. I only put 10 shares as a reminder, and it got filled. So I only bought like less than 1% of my position. Oh,
are you buying or are you shorting?
I'm shorting, but I only put 10 shares. I wanted to.
Okay, all right. So then you know what I'm going to suggest? Because, okay, let me just quickly give you a market overview that I'm looking at right now. The Dow is in leg C. It might make a peak C today if there's no new high higher than Friday. And the S&P is in leg C. Maybe, let me just double check. I think the S&P did make a new high today. No, it didn't. So there's a chance that this is going to be, that if the market closes, I think there's going to be a mixed close, and that's what I said earlier on, and I said to subscribers this morning. So you know what I'm going to do? Give me a second. I want to put this together with the market scenario. Well, even though Q trades by itself because it's a Chinese stock, let me put it together and I'll tell you what I'm looking at. And then we can go from there, okay? I'll be right back with Freeman and Dallas. We're looking at QIUH, and we'll be right back.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. I'm just trying to find you when the earnings come out for Kihu. I don't see an updated one. Oh, there we go. Earnings rose. That was the last one. Freeman, do you know when the earnings come out?
I'm not sure, but I just looked at all Chinese stocks are ripping today because I think the Chinese market was up overnight.
Right.
And all the Chinese momentum stocks are ripping right now. I think that's
you see, this is what I'm looking at here. If I was looking at it on Friday, I was still expecting a leg. I would have been expecting a leg D, and that's what it got today. I wouldn't have expected such a big move. But what I am looking at is that I think in terms of timing, because you've just got 10 shares, I think you're going to make money on this. But to do that, what you need to see by Tuesday, but Wednesday is the latest, that it hasn't broken into the 38s. Today the high was 37.60. What you really want is that this was just a one-time thing that it just suddenly spiked up because of other peripheral circumstances, and that, in fact, it really wants to pull back to the 35.67-ish area within a day or two and not break to a new high. If it does that, then the weekly chart is going to suddenly start to fade. But when I'm looking at a doji candle from last week in the weekly and it breaks above, the way my analysis for doji candles is a little different to what I normally hear, because I happen to like that when it closes 2 out of 3 time frames above a doji candle, it says that it's got a trade that will take you to a 1-to-1 extension. And that would take it towards the 3850 area. So that part of it says it's got to break down this week and come right back to the doji candle within by Thursday, the latest, back into the 34, it opened to 33, 34, 24, yeah, to the 3450s. Then I'd say to you, great, now you've got at worst a rectangle formation. For you at best, it just breaks down and finally goes to under 33.62. I would leave it with 10 shares. I don't think I would do much more. I'd leave it as a feeler position saying, you know what, this is the evidence. But I'm also going to say to you, even though it could turn around later on in the week, if it breaks 37.60, the high of the day, I don't even know why I would bother with the 10 shares. I'd just get out and say, you know what, I'm going to have a better position later. So only if it, in fact, I'd even say to you, only if it doesn't break into the 30, 36, 90, 37 area today, would I stay with that position. If it breaks there, I wouldn't stay with that position. If it pulls back, I'd stay with the position. But my eye tells me that something's going on. That monthly has been improving slowly. And now today it made it a little quicker. So I wouldn't mess around too much on the short side. I don't know if you'll be right until I see it start to trade under 35, and that needs to happen in the next 2 days. So I hope that helps you.
It does help, but if you don't have too many people, another question is, what about if I put half a position right now, the short, and put my stop a penny above today's high? What do you think about that?
I'm going to ask you this question. On Friday, did you expect that today it would hit 37.60?
No.
Okay. Is that your answer?
That's my answer.
Okay, good. So let's not.
When you get a moment, could you look at Facebook too? I'm sure that.
Okay, I will look at it right now. In fact, hold on. Facebook, folks, we're looking at Facebook. FB is the symbol. Ho, ho, ho. Here's a winner so far. So, folks, Facebook had a high when it came out back in May of a year ago, exactly, in May of 2012. It opens at 42.05. It goes to round number 45 high. I used to have that typed in. What happened to it? 45 round number high. And that was it, because it slips down to 17.55 4 months later. And what happens is it has a rebound, and that rebound goes to a beautiful left side, right side price time match once. And then it missed breaking into the high of 33.45, which is the high of the week of the 22nd of June. Makes a cup formation, left side, right side. It goes right to the bar on the week of the 1st of February this year at 32.51. So it misses it by about 90 cents. Pulls back from peak E. That's what in the ChapmanWave, we're always looking for those peak Ds and Es. And it pulls back and it goes underneath the 200 period, underneath the 9-period moving average. That's the black line. Then it goes underneath the 200 period. That's that goldish line. Let me just double check here that we've got. We're talking about the same. There we go. There. So I'm looking at the colors. Is that it's a kind of a yellow goldy line. And that line there is the 200 period moving average, which is starting to hug. So this is, and the MACD should have gone, well, this is a whole week that has to go. It needs to, the fast moving average, the green line needs to close above the red line. Stochastic is rallying, but it's only at 32%. You know, I think something's going on with Facebook. There is a problem. Their business plan is not, I don't think their business plan right now is working the way it should for other companies in this kind of area. So I think you've got the right stock. Now, what I would say to you is it's gone to a peak C, but that peak C is underneath everything. So there's no reason why it couldn't fail. In other words, if it was at a new recovery high, if it was in fact over, say, 30.2908, the high of the 19th of February, I'd say, great. Now you can expect that it's going to go even higher. So I've got peak C. Will it make a peak D? Because the stochastic is good and the MACD is good. Something's wrong. Something's definitely cooking with this company that isn't good news. So I'm going to recommend this. If Facebook starts to get to 28.59, somewhere around the 28.50s, then there's a chance it's going to go to leg D. As it stands right now, you just got a great short, and that's peak A, B, C. That has to be a G. That was a G at the top, and it's pulling back with the MACD and stochastic. If Facebook closes underneath 27.35, then 27.05 will be the target in the 120-minute chart, and that is based on the 200-period exponential moving average. So, yeah, congratulations. That one's working very nicely for you.
Thanks, Buzz. I appreciate that.
It's my pleasure. Thanks for calling. Always great to hear from you, and that was a good choice. Thank you for calling. So, folks, let me just do this. I wanted to talk a moment about the let me do this here. The Great Gatsby. This is the whole period of the 1930s, and you've got now there's a movie coming out with what's his name, Leonardo DiCaprio. Some of you might recall that I'd spoken a few years back, and I said this is a very interesting period. I'm expecting white suits. I'm expecting white hats. Those whatever they call those, like Panama hat. No, the white hats, whatever they call those things. And I'm expecting that hats will come in. I'm expecting that women are going to start dressing up. That the era where CEOs, these multi-billionaires, were interviewed in a raggedy T-shirt and shorts was the more dichotomous you could not ever even imagine that in any period people would be interviewed at the very top of their profession and be interviewed in the most casual clothes that you could, purposefully casual. I think we're going to an exact opposite era. And that era tells me that if we go into a Gatsby flappers period where there's a new kind of a Benny Goodman phase, I don't know, it doesn't have to be Benny Goodman, whatever it is, some kind of a jazz era phase, we are going to see something quite phenomenal. And that phenomenon is going to infiltrate right across the board, right across the world. And I've been waiting for it for a very long time. It's one of the pieces of the puzzle that I've been waiting. I didn't actually think at a certain point we'd even get to it. Right here, front page, the G-Style section of the Boston Globe Thursday, Fashion in Gatsby. And it talks about the roaring 20s on the runways. That's the runways, of course, that's the fashion runways. Well, young people and old people are bound to copy this. So we're going into an era that unless it's a market smash, it's going to fulfill a great deal to the upside, emotionally and in every other way. So I have no choice but to say we're in leg C in the Dow. We will get to a leg D. I don't often say these absolute emphatics, but we will get to a leg D. So higher highs are to come, regardless of how much we pull back. I don't see a crash type thing coming yet. I do see a pretty severe sell-off coming fairly soon. I don't want to give you percentages, but it could turn very ugly in some sectors, but the rotational part of it might not make it feel nearly as bad if in the right stocks. What are the right stocks? I really don't know. All I know is that in my opening call, we've got all our longs, and we have a lot of longs actually, are doing very nicely. Some of them are up, one's up in the 40% area, another one's up, I don't even know, 30-something percent. Might even also be 40%. Some brand new ones that we put on, doing very nicely. One we just put on the other day in the 13.5 areas at nearly $14.10. I don't know. I don't know where the sectors are going to be. I think I'm getting a feeling for it because the stocks that we have are telling me we do not have any housing stocks. I'm a little upset about that. We got into this housing stocks back in October of 2010, and I got out of them way too early, and I should never have got out of them. I should have sold half, said we're keeping half for a Rip Van Winkle hold. Let's go to Mark in Denver. Hi, Mark. How are you?
Good, Basil. How are you?
I'm just scolding myself, but otherwise I'm okay.
That's right. You've been good to me, so I'm not going to scold you. All right, couple of questions. I took a couple small short positions near the highs on Friday in the XLY and the XRT. Do you have a chance to look at one or both of those?
So, folks, the XLY is this S&P Select Consumer Discretionary. That's a Y.
Yeah.
Fine. Spider. And what what happened to my notation? I probably could go to my black charts and I'd find it, but let's just do this right now. It doesn't take more than a moment. So this is, boy, this is not going to be so easy. Give me 1 second. 5460. Here we go. So that's A. Here we go. A, B, C, D. A, B. So this is leg C in the monthly on the XLY. That is the S&P Select Consumer Discretionary Spider. The weekly chart is in A. Here we go. A, B, C, C1, C2, I think that's going to be. So that's 4801, 48, 4797. So I am going to call that, because everything about it says that should have been a peak D, so I'm going to go C1 and fractional miss C2, and I'm going to put it down. I can't put a down arrow because that defeats the whole purpose. I have to put a plus sign, and that says new buy mode. Oh, this is going to be interesting. A, B, C, D, A, B, C. So the weekly is in C, the monthly is in C, and I believe that the daily could be in C. Oh, man, let me just do this. A, B, C. Well, that's all we're doing, folks. It's the alphabet soup. Here we go, 7979. A, B, C, D. I'm going to call that C1, C2 as well. C1, C2, and then you get A, B, C, D, and A, B. Oh, what do you get for your count?
I don't know. I was getting confused. That's why I called you.
Okay, well, this is what I have, 5469, 54, 67, 69. Yeah, I've got this as B, and I don't. I at this particular point, I have full confidence in the count that I've got.
Okay. So yeah, so maybe not as good of a short. The XRT looks a little bit better to me.
Can I recommend something?
Yeah.
You're almost close to break even right now, if not up a few pennies.
Right.
I'm going to suggest, and man, I could be totally wrong here, because we've had two fantastic days, and even today should have been down. The S&P should have been down at least 4 or 5 just to give back something, and the S&P is up 2.5. I'm going to recommend you cover.
Okay.
And the reason being that even if you were right and you got a pullback, I don't think it'll be more than a quick pullback until I get the Dow and the S&P going to D, and I even think we might go to an E. I don't want to be in the wrong position. The tide, there's just nothing here that says the tide is going down.
Right. Do you feel the same way about the XRT? That looked potentially a little weak.
Now the XRT, the way I look at the XRTs, why have I not got this notated, is to go to the RTH. The XRT is the S&P retail. I go to the RTH. And the RTH I have fully notated, well, almost fully notated.
Yeah, it doesn't trade as much volume, so I was looking at that.
Yeah, I know what you mean, but it's just one that I've used for so long. I have to tell you something about volume when it comes to these things.
Yeah.
That if it's an index, I don't mind if it's light volume, because I'm not trading one single stock. I'll talk about that when we get back. It's actually a point I've been wanting to make for a little while. So I'll talk about that, and we'll talk about the XRT. I'll have notated by the time we get back. We'll be back with Market Denver, Basil Chapman. Dow is only down 4, S&P's up 2.5. I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everyone. We are on, and we're looking at XRT. Give me 1 second. I just need to finish the notation. I did them all time frames, A, B. Yeah, I'm pleased I did that. That was great. So what I'm looking at here is that in the XRT at 74.40, it's down 14 cents. This is the Spider S&P Retail. I have exactly the same thing. I have, in fact, B. What did I have with the RTH? I think I said B as well.
Yeah, the daily, yeah.
Okay. So now, there are a couple of things. If you do get something like a D, E, or F in the dailies, what needs to happen is that very quickly the tide changes, and that every moment, instead of moving higher, what looks like a rally turns out to be a rally failure. And we've got the exact opposite here. Every pullback has been a buying opportunity. And until that mantra changes, I think that I think we've actually reached the point here where we've raised the base, because there are so many people that have missed out on so many of the moves to the upside that on a worst-case basis, we'll have an initial really sharp pullback, and then we might just go sideways to slightly down. So the majority, if you get the majority of the move to the downside, that's why the timing, I think, is, I think you're right, but I think you're a couple of days early.
Okay.
So my recommendation is be patient. See what happens probably by Wednesday or Thursday. If it recycles, it could even go into next week. But I'm real close to some kind of. I'm looking, as you know, I'm starting to look at the short side more and more. But it's in sectors that have had spectacular moves. I want limited upside risk and much more downside potential, rather than stocks that are in a sector that's just breaking to the upside. But the RTH, now if the RTH, the retail, starts to come down and come down sharply, I have to consider that that's going to be a market negative, because that's just saying the retail buyer is tapped out. I mean, that's what it'd be saying. So I'm going to be watching it real closely. So I don't know if this is the big move coming up in the weekly charts to start getting a move to the downside going into next week and the following week, or if it extends to next week. But I think we are real close to some kind of a pretty decent pullback. But there are some stocks that are ignoring it, and that's where you want to be focused. So, yeah, I think that in terms of indexes, you chose the right sector, at least for now, to be looking at. But I would also be looking at biotech, and I'd be looking at some of the sectors that have done absolutely phenomenally for 3 years now. They're the ones that are becoming more vulnerable. So thanks for calling.
Thank you. Appreciate it.
Very much so. And so now, folks, let's do this. So what I'm looking at is a kind of I'd spoken about this so long ago. I remember talking about it and saying, I'm waiting for a period that replicates the period that went into the 1920s and then took over in the 1930s. 1930s, of course, was the Depression, but it all started in the jazz era. You know, all the clubs and all that, where Duke Ellington and all these guys would be playing. Nat King Cole, all the guys through in the 1920s, and then you got something else that while things were terrible, you had to have some happiness, and that was the jazz period, and that's kind of the modality that I'd be looking at here. I'm not giving a time frame. This is going to be very difficult. I think we're going to extend longer than people would think before I get that leg D. Could be even an E. I don't know. Another thing is art. You remember I spoke about art? I must have been 5 years ago. I said we're going to go into a period, as I see it, and it could be totally wrong because it's just part of my market trends watch, a period of modern art. And that modern art, if you look at prices of modern art today, it is unbelievable. So, with that, I'll be back tomorrow. Look at my opening call. I think you'll find that it has some really interesting perspectives, some really nice trades. It's on the front page of TFNN. I will be back tomorrow. Stay tuned for Larry Quesavento. Always a great show with Larry. And, of course, shows right through the day. Don't forget, here in Boston Saturday, Tom and Darren.